Hey, marketers, welcome again to this Monday. I am excited and thrilled to be here with you again. Today, we're going to be covering debt management and debt reduction. I am creating this live today as a special request from a number of small business owners that are part of my circle, but also from people who reach out privately through either Instagram and Facebook. So we're gonna be talking today about debt management. Let me share my screen here with you so that we can kick things off, okay? So as soon as we have this going on, okay, it seems like we are good. And this is what we're going to be covering today: debt management and debt reduction for business owners. If you don't know me, just by way of introduction, my name is Lunta Di La Paulo. I am a CPA. I help business owners uh, increase their business profit, maximize their cash flow, and reduce their tax burden. So these are the really core functions of our business. When a potential clients come to us, that's usually what we try to do for them. But today we're gonna be looking at debt management and debt reduction for business owners. Okay, I could spend in our class just talking about debt statistics about our country and American families, okay? But that's not what I'm gonna spend most of the time here. What I want to do is to actually walk you through a step-by-step process that you can implement on your own to help you get your debt under control. Okay, pretty much across the world since the pandemic to date, either for a lot of businesses, either they went out of business or they continued operations, but with a significant level of debt. This is all across the world. This is all across the board as well, okay? Whether it's personal debt or business debt, as you probably know right now, right? Our country, our nation is at the highest level of debt that it has ever been in since its inception. Essentially, we have passed 34 trillion dollar in debt. That it's an amount of money that most reasonable people believe we're not going to be able to ever actually pay it, because guess what, our GDP today is lower than our our national debt. So we are a nation of debtors, and we also have a government that continues spending beyond our means. So today I really want to share with you, how do you manage your debt, and how do you develop easy steps, step by step, to actually keep that under control. So the first thing we're going to be looking at here is assessment. Okay, we're going to be covering the assessment level. Okay, we're gonna take an inventory of the personal and business debts. Okay, this is very important because, if you want to start any journey, right, you set up your GPS at a point and a place that will guide you towards your destination. If your destination is to get debt free or to keep your debt under control, okay, or whatever your goal is, you need to make sure that you know where you are today. So that's what we're going to do first. And then the second thing we're going to do is to create a plan for debt management or debt repayment, to start reducing, okay, your debt burden without sacrificing your business, right? I always believe, I'm a firm believer that we cannot sacrifice the chicken to get the eggs, okay? It's important to keep the chicken alive so that we can continue getting the eggs, okay? And then lastly, we're gonna cover the execution part, the execution piece, okay? How do you actually move from your assessment to planning and start putting into motion what you spent, the first two steps doing. Okay, so that's really what we're gonna be doing. So the first thing, as I said, we need to take an inventory of personal and business debt. So this is a screenshot of a workbook that I'm gonna give you access to. I'm gonna make it available in the link as well, so that you can use it to catalog your personal or business debt. That way, okay, you'll be able to, I'm gonna click here on my link and actually go there. Okay, there's a little bit of disclaimers here, and then we go to our data. Okay, so from here, what we're seeing, okay, what we're seeing is the different type of debts that usually it's going to be a client, or in your case, you as the business owner might have, right? We have the lender column, the purpose of that, like why did you get that debt, the original amount, and if it's a credit card, the limit of the card, and the current balance, right? And then we have the origination debt. Actually, we should have, I actually think it would be useful to have what percentage of that is outstanding, right? So if we can do this, okay, let me change my format here to percentage. If we can do this, I think, okay, let me just remove these errors. If error, okay, I wanna Okay, so this actually gives us a better view of our facts, right? So I also like to change the color to black, because blue is what I need to do my data entries on, and blacks are calculated fields. Okay, so I have my original balance, the current balance, and then I have a percentage of debt outstanding, right? I want to know what percentage of my current balance is is to the original amount, right? The date of the origination, if it has a maturity date, the annual interest rate on that debt, and the monthly payment, or if there is a minimum required payment, you can also add it. Whether or not there is a required collateral, a description of the collateral for anything that we respond yes here, and the class of debt. Is this a personal debt or a business debt, right? Personal debt are typically the type of debt that do not necessarily make you rich. Most of the personal debt are designed to make you poor, but business debt some has the potential, let me put it this way, has the potential of making you a little bit wealthier, because of the power of the interest, that it's tax deductible, but also it compounds your growth. Okay, and then we have here the type of debt. Under the type of debt, we have really various types of debt. Okay, this is not a complete list, but we can see student loan, mortgage, car loan, line of credit, credit cards, medical bills, revolving debt, unsecured debt, secured debt, home equity loan, unpaid tax bill, right? Debt from friends and families, and other types of debt. Okay, so you'll be classifying each one of your debt based on specific bucket you have, because it's going to be important to determine, okay, which debt should receive priority to start addressing right away. Okay, and by the way, another key factor is going to be the cost of that debt, and the cost is measured by the interest rate. And then here clearly we have the maturity, right? Some debts are revolving, like a line of credit or a credit card. You draw and you pay, you draw and you pay, and so forth. And then you have a long-term versus short-term type of debt. Okay. And then I created this other column just to tell us, okay, how long it's gonna take to pay based on, excuse me, on the monthly payments. Okay. So it seems like the longest debt, which is the mortgage, there is another 18.5 years to be paid, and there is a medical bill which has the shortest uh, a time frame of approximately 2 years. Okay, and then we have the weight of each debt on the finances. Okay, so once we have that, we can see, okay, which one is the biggest debt we have, which one is the smallest, and how can we start tackling these respective debts. So this is really the first place, right? This is, it's similar to your starting point, a starting place on your GPS to give you direction where you are going. Okay, so this is very important, and I understand this is not only a mathematical process, but it is also a very, very much an emotional process, because sometimes we're just going with the motion. We're not really sure how much do we owe, who do we owe, and what's the impact of these debts on our personal finances, right? So as you can see here, these individual on average spends about 6,500 um, on debts repayment, right? It's a huge amount of money that is going into paying the debt. So unless you have this information really in front of you and you have it very clear, right? It could be, I'm gonna make this a little bit bigger. It could be, it could be really easier for you to get, lost on, on not understanding the finer details of the implications of that. Okay, this is, as I said, an emotional process, and it can be very overwhelming. Sometimes you don't even remember certain debts, right? So it's really critical for you to make sure to really spend a little bit of time, open this Excel file, download it, and start putting every single detail, right? Go to your portal online, whether it's Amex or Citi Card or whatever other credit card you have, put all of them in a list, okay? Go to your student loan portal, download your report, look at the interest rate, look at the amount outstanding, okay? Because the goal of this is to actually have a full picture of how much debt you have and how we can start thinking about how do we address this, what can we how can we figure out a way to reduce the weight of the debt on your personal life, right? So this individual has a total over 500,000 or 600K in debt, but they have paid already quite a bit of it, and there is a remaining 551,000. Okay, that is outstanding, and they have a little bit of time to pay a lot of them, or if not all of them. Right? We can clearly see a number of these are credit card, or two of these are credit card. There is a mortgage, a student loan, a medical bill, a car loan, and then a secured loan, right? From an SBA, that is a business loan, right? This is, you know, I believe maybe 70% of American debtors are gonna fall in some of these categories. Most of us use credit cards. Most of us have a mortgage. Unfortunately, some people have medical bills that is just way too large for one. At some point, someone in their household got really sick and seriously sick, and they didn't have the resources or the insurance, and they just couldn't pay it. Or an auto loan, for some of us who want to have a little bit more of flashy cars or good toys around us, that could also affect the level of our debt. Okay, so I really want us to take a second, take a little bit of time, and really make sure to go over every single debt you have, right? What I didn't include in this example is, debt from friends and families and parents, right? Usually, right, we would have here, something like loan from uh father. Let me just use that as an example. Cover personal expenses. Okay. And let's say you borrow 25,000 and you haven't paid zero out of it, right? Let's say you got that on April 1st, 2024. Okay. And your parent is charging you only 2%. There is no maturity date. They are really nice and they said, well, pay us when you can. Okay. So with that, then uh let me just, the current balance would be 25,000, not zero, excuse me. Right. Even though this monthly payment is there, but it's not really there, right? You're not really paying this monthly payment because it's your father. If you had borrowed, let's say, from a friend, there is no collateral, and then you have NA here because this is also another personal loan. And then this is from friends and family type of debt. Let's put here long term, and here we're gonna put it as a long term as well. Okay. So this is just to give us, a picture of, what you need to be thinking about. Okay, you have that from your parents, from your friends, from uncle, from other siblings. The goal is really to catalog everything, to put everything in a system that shows you the entire picture, that tells you, okay, how much you owe, right? And what's the interest around that. So I'm gonna move forward. After you have done that, the next thing you need to do is to look into your credit report, right? Your credit report is very important. It might show you some debts that you even forgot you had them, okay? You can get one credit report for free per year. Okay, so take advantage of that. Go to any of the credit report agencies, set up your, sign up and then pull your credit report, or you can request it from mail, so that it's delivered to you. Make sure you review it holistically. Like if you go online, okay, you can actually see the historical trend of your credit score, for example. Make sure you're checking that you're following up with the fluctuation. You know, sometimes if there is, a lot of soft or hard in credit inquiry, your credit score can dive in, or, a month or two that you weren't able to pay for, your credit cards, your score can go down. But also it helps you to make sure that, your personal information weren't stolen and someone is, out there, using your identity to get access to credit, right? So when you're reviewing your credit report, all this information becomes really, really, really critical. You're reviewing the addresses, or the addresses in your credit report matching to where you've lived, the history of your credit inquiries, the type of debt you have, the amount that is being reported there. It's not going to be necessarily, the most accurate balances, because there is a time difference between when credit agencies receive the information from the multiple service providers, providers to them. Okay, so check for anything unusual. If you see something that shouldn't be there and it's there, you need to call the credit agency and get them to remove that information from you. Okay. So very, 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 very much important. So this is just a sample credit report. If you've never pulled one, this is just, the starting place, the header of it. Go online and pull one for yourself and see what's included on your credit score and review it. If you have a relationship with an accountant, they can actually, or a financial planner, they could actually be, a good help for you. Set up a call with them, ask them to help you review your credit report and identify any areas of risk or concerns, and they can advise you accordingly. There is also, I don't think I might be wrong about this, but they are credit specialist repairs out there. But I would honestly stick with a CPA who is knowledgeable about credit repair, or a financial analyst, if a financial planner, okay, to help you review these and figure out ways to address your credit score if you have a really, really bad credit. We have done this for a handful of clients who came to us. They just were in a really difficult place. They started ignoring the information they were receiving from the credit agencies. They weren't paying. Life happens, and people sometimes just let things move the way they want to move. But where people want you to be accountable to them, you know that's kind of one of the problem with capitalism, right? People don't necessarily, I don't want to say this, but this is really what you oftentimes is happening in our culture, right? Our systems don't care whether or not we have problems, whether or not we have, family situations that are not favorable, right? They're keeping track of number, and that's all they're measuring. Did you pay on time or not? Did you maintain, is there any fraudulent activity taking place on your credit report and so forth, right? So all these things make it really critical for us to, take a look into the credit report and review it carefully, every single detail, to make sure that there isn't anything suspicious or anything that shouldn't be there. Okay, so with that, I'm gonna move to the next item, right? Your credit score, your first of all, your credit review, credit history, your debt inventory is just one piece of managing your debt, right? Now you know how much debt you have, how much it's costing you, right? The second step, we also recommended you to take a look on your credit report to make sure that uh, it's actually accurate, it's reflecting what you took in life. But now you need to make a quick assessment of your personal finances, okay? And we're gonna do that by reviewing two primary documents, okay? Number one, as a business owner, you need at least an income statement and a balance sheet. At the personal finance level, you also need exactly the same thing. Let me uh, you essentially need the same things as well, right? You need a personal income statement, and then you need a personal balance sheet that shows you your net worth, right? So usually when we start working with clients, the first two things that we look at are, I'm gonna make this a little bit bigger, right? We're gonna be looking into their personal income statement. Okay, how are they generating their income? Do they have wages? Do they have business? Do they have stocks providing dividends, or do they own debts that yields interest? Did they sell any significant asset that generated capital gains, or do they have other passive source of income? Okay. After that, right, you need to do very much the same thing, right? Keep track of all of your income, right? We create a budget versus an actual, okay? And then we look into the difference, okay? And then we look into the expenses, okay? Rent, mortgage, condo, association fees, food, groceries, they purchase or eating out. in terms of transportation, car insurance, vehicle payments, transit pass, gas, parking, repair and maintenance, and other auto expenses. And then we go to health insurance, life insurance, dental insurance, all other sort of insurances. And then we go to utilities, right? Phone, internet, electricity, water, sewage, janitorial services, and so forth. Then entertainment, your subscription. And around subscription, this is really critical, right? It's Today we're using, probably 10 to 20 different subscription, whether it's Wall Street Journal, New York Times, Netflix, or Google subscription, or going, make sure you actually create a list of every single expenses, right? This is in an income statement format that just provides you the major headlines, right? The major headlines to help you figure out, okay, here's my budget, here's where my money is usually going. And then, when we start putting them here in this journal, it actually produces the actual amounts, okay? This actual column, that's where it's coming from. But initially, right, you have a budget, you have an estimate of how much certain things cost you, for example, okay? Whether you contribute to retirement, even though it's not an expense, but it's a portion of money that you're not going to be using, it's going somewhere, right? The purpose of the budget is to give direction to your money, right? You're giving direction and instruction to your money, right? Whether you have an HSA or a flexible spending account, right? So, or if you're planning any major household upgrades, maybe you want to upgrade the kitchen, the bathroom, you want to get some new curtains, or you want to go, solar with your household and so forth. So you need to keep track of your income and expenses. And the reason we recommend that, it's because based on that, we can actually determine, okay, what's a good course of action to start mitigating your debt. So realize that, we're spending already 27 minutes here just doing the assessment portion, right? This is the most critical, if not the most important piece around debt management and debt reduction for business owners, okay? So number one, I'm gonna go back there, right? I spoke about how we need to have a catalog, a clear list that details every single debt we have. And the reason this is so important is, if you don't know how much you owe, how much you're paying on a monthly basis, you just don't have control of your cash flow. You cannot have control of your cash flow if you don't know where your money is going, right? And then we talked about the need for your credit score and reviewing it, okay? And now we're talking about, you need to have a personal financial statement. And the reason for that is, at least in our case, we develop an idea of where your money is coming from and how much, and where it's going and by how much. Okay. If we cannot do this, then we can't really help you. That's the truth. Okay. So after you have your personal income statement, then we jump into the personal balance sheet. The personal balance sheet, especially the debt, the liability portion, really should tie back, really should tie back to the level of debt you have, either at the personal level or at the business level. Okay. So just really be mindful to make sure you have an inventory of everything you own, you control, right? Every single bank account you have, savings account, any loans you made to friends and families, any other assets, if you have a personal residency, a second home, art collection, I'm loving collecting arts now. So one of my pieces is actually right back here, and around the house, there are other pieces as well. okay, furniture, and assigning an approximate fair market value to them. If you have jewelries and expensive clothes, investments in the stock market, bond market, real estate, or other private businesses, right? Any other assets you have, life insurance, retirement account, college savings account. Oh, these should be HSA account, okay? HSA accounts, okay? So that we know exactly where you are. And then we do the same thing with liability. The subtraction of that is what gives us the net worth, the net worth. And from here, we can actually start, putting a picture together about how we can help you, right? Now we have clarity around, okay, how much debt you have, who do you owe money to, and by how much? What assets do you control? What's your source of income, your outlays of expenses, right? What's your net worth? And from there, we can start drafting a course of action, right? That can help you manage your debt or get out of debt. So what do you need to do with this information? Now that you got here, right? We've moved from the assessment, right, into planning, right? Now what's next? What do you need? Number one, creating an order of priority to tackle the debt, right? What do we want to address first? Do we want to pay out the highest interest rate debts or the smaller debt so that it gives us peace of mind that we are making progress towards something? Okay. That's very important. Very important. Uh, how do I want to pay my debt, for example? It's another very important question that we need to think about, right? Do I want to refi? Do I want to consolidate my debt so that I don't have to have multiple accounts that I'm looking at for various debts? Do I want to restructure my debt, right? Usually with, the IRS, you can do an offer and compromise, right? Where they reduce a little bit of your debt or significantly your debt if you meet certain requirements. Or do you need to work a little bit more so that you can generate more income for a given time frame to give you additional resources to pay your debt, and then once your debt is more manageable, you can focus on other things? Or do you want instead to focus on expenses reduction? Do you have personal items that you can sell maybe that can give you quick liquidity, more cash on hand so that you can go ahead and pay a little bit more of your debts? Or do you want to do a combination of all of the above? Or is your case really critical that you need to contact a bankruptcy attorney to help you file for bankruptcy, right? So, that's a little bit about how we need to start thinking when we are building the action plan, okay? So once you do that, let me touch on, some of these items might require you, for example, to work with a professional, right? An attorney, an accountant, a financial planner, an investment manager, or an asset manager. Okay, especially if you're a business owner, right? It's really ideal that you spend a little bit more time to explore, options that would be optimal for you and your family, and help you get the most benefits out of this situation. Okay. And once you are at that planning stage and you realize, okay, what do you want to do? Who's involved to help you? Right. The execution piece becomes a little bit easier because at that point, you are clear about what you truly want, right? Do you want to be debt free? Or do you want to transition from bad debt to good debt? Okay. To some people, it might be difficult to conceive the idea of good debt, but trust me, there is good debt, right? The type of debt that helps you make money, okay? Instead of just digging the hole deeper and shoving you lower and lower, okay, into that. Or do you just want to be in a more manageable space where your debt is not overwhelming, okay? Um, so that's really what you need to consider first. Okay, what's your ultimate goal? Do you want to get out of that? Do you want to transition from bad debt to good debt, or do you want a low manageable uh, type of that, right? So from there, clearly we have our GPS that we started with by figuring out, okay, this is all the debts that we have. This is our financial position. We know how much we make, how much we're spending. We know our assets. We know our liabilities. We know our net worth, and we can determine, okay, maybe we can use one of these strategies to pay down the debt, and this is what we want to do, right? But here's really what could be critical in defining the success between you succeeding in managing your debt to living forever in debt, right? If you are married, if you have children, if you have relationship with other people, you really need to involve these people in this conversation, because maybe you have a level of lifestyle that or your spouse, your children, you think they need certain lifestyle, and you are doing everything, you are borrowing a little bit more to meet that lifestyle need, right? There have been situations where we had to involve a conversation with a business owner, with their partner and their adult children, right? Because some of the kids were involved in the business and they got a salary a little bit higher than they actually should have been receiving, right? And the family was just getting deeper and deeper in debt because of the overall family's lifestyle, right? And part of addressing the debt problem was really bringing everybody in the same page to understand, hey, this lifestyle is not sustainable. If we want to do something to get out of this place, we need to all work together in managing our lifestyle, our spend, our cash flow, and figuring out a way to start paying down the debt so that the next generation doesn't inherit just a large amount of debt. Okay. So maybe you need to have some of these conversations with your spouse, with your children, just to tell them, hey, look, we are in a situation that, I don't blame you. It's largely the decisions that I made, and I thought it was for the good of all of us. But right now, we need to figure out a way to move forward in a way that it's not going to be too disruptive to the family, but that all of us can support and come together to make this plan work. Okay. So that's really what I would recommend you to do. Right. And, if you feel like you can't do this on your own, maybe you need accountability. Maybe, that accountability partner, it's not your spouse, you're one of your adult children. Maybe it's your CPA, your financial planner, your attorney, or the professional, or even a friend. Okay. But if it's necessary, I would recommend you, to seek professional help. If you can't, figure out everything together on your own, please seek professional help. Okay. Please find someone who can help you. It doesn't have to be me. It doesn't have to be my firm. But if you are in a place where you truly believe this debt that you carry is becoming unmanageable, unsustainable, it's not, making you sleep in peace, right? Try to find help. Seek a professional. Ask for help. Okay. Interview 3, 5 professional and figure out who would provide the best value to you, who would actually get you where you need to be, who would, do everything they can to help you succeed. Okay. And if you'd like to get in touch with me, if you'd like me to help you, please reach out to me. Here's my contact information in front of you. You can find me on WhatsApp. You can, send me a text message. You can reach out to an email. Please feel free to reach out to our to check our website, and I'd love to connect with you to see if we can help or if we can be of value. Okay. I look forward to getting in touch with you, to hear about you, to hear your story, and again, we're here to help you in any ways that we can. Okay. Thank you for spending your time, your early morning with me today. Okay. And again, if there is anything that I can do to help you, please let me know. Okay. Have a great rest of your day, and I look forward to connecting with you soon. Cheers.